Okay, so good morning, everyone. We are happy to be here with you for this panel around buy and build strategy. I will first maybe ask each member of the group to quickly introduce themselves. Stéphane, you want to start?
Sure. Thanks, Stéphane. Nice to meet you this morning. So my name is Stéphane Letroy. I joined Ares Private Equity 2 years ago to help build a private equity business in Europe. Ares is a large multi-strategy alternative manager invested in credit, real estate, private equity, infrastructure, and recently secondaries as well. Nice to meet you all.
Good morning to all of you, and thanks for being with us. So I'm François Gerfagnon. I'm from Ardian, who is the famous investment house, multi-strategy also. I am the happy leader of a team of 35 great talents that invests in mid-sized companies in continental Europe. We are currently investing a 2 billion euro fund. And our strategy is mainly focused on growth, organic and build up. So great to be with you today.
Hi, Charles Fleischman. Nice to meet you all. I'm a partner at Trilantic North America. I co-lead our business services effort, one of two sectors that we focus on at Trilantic. Trilantic, we're currently investing out of Fund 6, which is a $2.75 billion fund in North America, focused primarily on partnering with founders, families, and entrepreneurs. So glad to be here.
Thank you. And myself, so I'm Stéphane Vignals. I'm a partner within EY, leading the private equity practice for EY in France. So the topic today is buy and build. Buy and build is obviously an important value creation levers for GP, as the market has been strong with high competition for platform and as well for add-on. So first question is, what is, to your perspective, the key success factor for a buy and build strategy?
So if I start, this is not new. So some of the themes are still valid, and maybe some are a bit more new or have to be refined in the current context. So I would say for us, it's key. It's part of the theme. On average, just to set up the environment, we per platform on which we invest, we do 4 buy and build on top of that. So it's really a key theme. And what we see is that the earlier you work on identifying these opportunities, the better it is. It's a great tool to entertain an educated discussion with management. It helps you also to refine among a big list which are the ones that make most sense, which actually leads me to the second topic. And for us, strategy is always of most importance, and finance and numbers come only in second. What I mean by strategy is that build-ups for us are a strong way to complement either the geographical footprint of our platform or the portfolio of products, and that has to be really the primary focus. And then, since we are all investors, finance also comes into the game, but only to the final extent. And maybe here it's getting a bit more complex. Everyone has the idea, of course, that acquisitions should be as relative as possible, which they are usually, but in the context of inflating prices, not that easy. What matters is not so much the absolute valuation that you get on those build-ups, but the relative value and the gap between the initial acquisition price and the one at which you perform the build-up. Yeah. And maybe a word here is that the more fragmented the market is on which you implement the strategy, and the less consolidators there are, then the gap, the wider the gap is. So part of the theme for us is to try to find these. Now, not easy, of course, because everyone looks at that, and that's why in some cases this gap narrows. In which case, on top of what I mentioned, it's key for us to identify the synergies. So there are basically 2 prices, the one up front and the one also integrating the synergies, which you have to pay eventually more and more in the current context. Yeah.
Charles, you want?
Yeah, I would just add, when you talk about success factors in a buy and build strategy, for us, we're really building businesses that can exist on their own, both with our help, but ultimately without it. And so integration is key. Having looked at a lot of platforms, private equity backed and otherwise, that's not key for everyone. We think it's really important. It's important from a couple ways. It's important because you can get the synergies that you mentioned, but also these are people businesses and they need to be absorbed properly, and you need to have your culture instilled upon them, and that's a really complicated matrix to establish. So getting integration is important, and then also for us, actually building the M&A capability at the company itself is important. So we find that if you can build a repeatable process, both identifying, executing, and then integrating acquisitions, and if the company can actually manage that, then you will get paid a higher multiple at exit when you're going to market. And so integration, but also building that engine, that muscle within the company, I think are really important success factors when you talk about a buy and build platform and what you do with it.
Yeah, maybe just to add, I agree a lot with that. When we look at buy and build, so Ares is specialized in mid-market, so a lot of our returns is driven by revenue and EBITDA growth. You know, it's over 70-75%. So there's not much financial engineering. There's not much multiple arbitrage in mid-market. And so it's all in the value creation from the portfolio company. And there, I think there's just two big themes. You know, the first one is, as an investor, what do we look for? And then in the company, what do we look for? As an investor, we try to be thematic. So is this a good theme? Is this a good sector? Is this a good theme? You know, digitalization, market fragmentation that is being concentrated, demographic trend, automation. So we try to be very thematic because we often say, you put a good manager in a bad industry and the bad industry always wins. So thematic is very important for us. And two is the white space. In mid-market, in buy and build, you want to find the next home for the business when you come to sell. So if the white space is big enough, you will have invested a lot of resources in that business, but someone at the end will want to pay for it. And then at the company level, I couldn't agree more with what you said, Charles. You know, we use the three keywords to assess whether that's a right platform for us, and that's people, process, and culture. Most of what we do is buying companies that are driven by people, not so much assets. It's asset-light most of the times. So do we have the right people? Most of the times in mid-market and in buy and build, you're seeing companies with extreme growth, very high growth, and you will almost every time need to beef up the management team, add more resources, not so much capital, but human resources. So people is the number one. Process, nowadays, a lot of process is systems, IT systems, cyber, ERM, ERP, CRM, ERP, that will need to be changed. And culture is what you said. You know, if the company doesn't have the right culture at the beginning, that's probably the hardest thing for us to change, and we would rather not do the deal.
Thank you. Second topic I would like to touch on is technology. Obviously, technology is an important dimension of almost every transaction today. What does it change in your buy and build strategy, both as a GP and as well for your portfolio companies?
So maybe I'll give an example. Actually, it's funny because most of the times when we talk about buy and build, to accelerate the growth, it's buy and buy. You know, a lot of the buy and build is done through acquiring other companies and adding them to a platform. We have acquired a company 2 years ago in healthcare, specialized healthcare services in the UK called Exemplar, which is a true buy and build. What was attractive about this company is that there was no competition. It's a business that provides home care services for very high acuity patients suffering mental health and very often also physical disabilities. And we are able to provide this service at the same level of care as the hospital, the NHS hospital in the UK, but at half the price. So there's a huge gap between supply and demand, and a huge demand for our services from the NHS that needs the beds for short-term care. And what we realized was it was almost like a curse, because it was a great differentiation about this business that attracted us to it, but it was very hard to grow because there was nothing we could buy that was at the same scale. So we had to build. So the whole of the growth in this company is greenfield. We have to buy new homes from scratch. They're all the same. It's very important that they are exactly the same standards. And so the idea was, how can we accelerate that when it takes 2 years to build one home? So digitalization was essential there for two things. First of all, before we buy the home, we need to make sure we can staff it. It takes 50 staff, 50 healthcare workers and nurses to care about the patients in one home. And as I'm sure all of you know, in healthcare right now, after 2 years of COVID, it's impossible to find staff, especially in the UK. With Brexit and COVID and the rest of it, NHS is suffering to find staff. So we developed with a consultant and artificial intelligence software to predict staff attrition and churn, and to adapt how we could better attract talent and retain talent in our homes. And so we track holidays taken or not taken. We track sick days. We have put an emoji system in every one of our home, which is not very glamorous. It looks a lot like when you go to an airport at the toilet, you will have the green button, the yellow button, or the red button if you're happy or not. So we have this in every one of our home, and every day we ask our staff members to, when they come in, press one of these 3 buttons. When they come out, press one of these 3 buttons. And the idea is to try to look for correlation in terms of predicting when staff are going to leave or when staff are going to get sick, so that we can adjust as best as possible the use of agency staff and making sure that our homes are staffed appropriately. The second digital tool that we've developed is mapping the demand. So here we have used with, again, another consultant and digital tool to model town by town, city by city in the UK, all the stats coming out of hospitals, statistics coming from learning disability centers, and all other demographic statistics to predict how many likely patients will have high acuity mental health issues. One unexpected correlation factor, for example, was diabetes, which we wouldn't have foreseen before. When people with diabetes have a higher prevalence of developing mental health and physical disability conditions at a certain age. And here that enabled us to decide first where we're going to allocate capital, where we're going to allocate resources to open in those cities where we will predict a shortage of offer and therefore higher demand for our services. In both cases, we had no choice. Without this, we couldn't accelerate the greenfield development of this business. So digitalization helped us a lot there. Thank you.
I would just add to that indeed that as we all know, digitalization is a key part of a roadmap and the success of a company. Now, in the context of buy and build, maybe 2 or 3 things to have in mind. First, it's a question of culture, first of all, both from the management team who operates the initial platform. They need to be aligned on that before we invest. And they also need to recognize that they need to make steps in order to improve. And the dialogue that they entertain with the management of the targets that they look for sometimes is not always easy. The question of culture comes always into the game. We touched upon the subject about integration, and usually it's less obvious, so it needs a bit of more time to do. Eventually, I think there's no choice. You can see it as a way to re-rate the asset at the end, but I would even push it further. It's not just a nice to have, it's a must have. So I would even say that if you don't do it, you will have a derating at exit. So clearly a key aspect. First, the management of the platform has to be really very focused on that. If there are add-ons that can complement the topic, great, but not so easy.
And I guess the only thing I would add is where we haven't seen a great impact from technology is actually on the sourcing side. I mean, yes, there's some efficiencies in terms of managing a pipeline, in terms of executing your buy and build strategy. But in our experience, it's still about people knocking on doors and having people out in the field who are having a cup of coffee or a adult beverage with the owner of a distribution facility or something else. And so that's something that we haven't been able to outsource to technology. And as we build out our M&A capabilities within our portfolio, making sure we've got the right business development resources and we've got people, at least within the U.S., across the country who can execute that and have the right relationships is something that still is done the old-fashioned way.
Excellent, thank you. Next topic is around the difference in your strategy between vertical integration and horizontal acquisition. Is it one or the other that brings more value to your perspective?
Yeah, so in terms of horizontal and vertical integration, we've done both in different contexts. I mean, we've executed over the last, I think, 15 months, 20 add-on acquisitions across 4 or 5 portfolio companies that I sit across. And so what it really requires is an assessment of the industry structure, right? And in some cases, horizontal makes more sense, in some cases, vertical. And it also depends on what's going on in that industry at any time, right? So today, for a certain business, it may make sense to go vertical because you have supply chain issues that you need to mitigate, or you want to get closer to your customer and you've got other labor issues on the other side, and that may make sense. But there are challenges with both of those. On the horizontal side, again, that works in a lot of contexts, but also has challenges in terms of the cultural elements that we've talked about. Sometimes you're acquiring an age-old competitor of yours, and that brings about complexities. Or if you're acquiring somebody at the other end of the country, figuring out how to manage that appropriately and make sure you know what's going on at any given time is hard. So I think both vertical and a horizontal can make sense, but it's really about aligning with your team around which levers you want to pull, and for each given industry, kind of what makes sense.
Excellent.
I would maybe just add horizontal integration is very often in mid-market a must before exit. It's very important to enlarge the total addressable market. Very often you find a champion in one region or in one country. In the US, it's really one state. And if you are so good, if you're too good at integrating that region or that cluster or that state, then you have penetrated your market too much, and the next buyer will say, it's more risky for me to then go into another country. So it becomes more and more important, I think, certainly in this world where we have to create more value from the pure portfolio company themselves rather than multiple arbitrage, to enlarge the addressable market before exit, to give more growth and room for growth for the next owner. So very interesting trend there.
Agree on that too, and maybe I would add a third way to do buy and build, which is to do it from a geographical point of view. It's not really horizontal, not really vertical, but the idea is that, for instance, if you have a company, typically if I were to take an example, the routine laboratory business, you have a network, you want to densify your network, and here the rollout of the buy and build is quite easy. You're staying in the same vertical, but you densify your network. Synergies can be derived quite easily. The problem is more on the valuation, so we already touched the subject. And then also, speaking of geography, adding value to the exit is also giving some perspective on international. So making a first step in a new territory can also be of great appeal to future buyers. We love doing this, being mid-sized investors, to show all the potential so that the company can become eventually a large one. And people like that, investors like that, managers like that, because also it's a great way to get challenged and a new roadmap of growth. So that is also an interesting strategy.
Okay, thank you. Maybe a last question on my end. I mean, you've been playing in a very bullish market over the past few months. The situation is a bit different with more uncertainties. Does it change your perspective in terms of buy and build strategies?
I'll start very quickly. I think we heard it in the last panel. The time for cheap debt and low interest rates is over, and then there's nowhere to hide. Now you need to create value from the core of the portfolio company. What we see now is obviously debt is less available. M&A flow is going down this year. And so we think buy and build continues to make sense, but very often we deal with entrepreneurs, and it takes time in private equity. It usually takes a year lag for people to realize valuations are coming down. Even if the listed equity market is going down, there is always a lag in private equity. And so we try to, when markets are volatile like this, I think flexibility is very important. So we try to adapt our approach to these entrepreneurs, to these founder-owned businesses by maybe offering more flexibility in the type of capital that we can offer. And for example, using minority equity or structured equity, or not necessarily something that means we need to argue about the valuation of these platforms, because it will take, in my experience, it will take some time for some of these valuations to adapt. And so I think the flexibility of the approach for continuing to grow these companies in buy and build is going to be very important in the next 6 to 12 months.
I was just going to say, in the U.S., we're seeing this play out real time in terms of targets that we've been trying to knock on the doors, and these are add-on acquisitions. People are returning our calls at a much greater rate than they were 6 to 12 months ago. And I think what you're seeing is, in what I would coin like the longest telegraphed recession of all time. It's coming, but we don't know when. Business owners are starting to really have nightmares of the last downturn and want to get out. And so calls are getting returned. People are open to conversations. And so we think it's going to be actually a really interesting time to pursue add-on acquisitions for all of our portfolio company and to build them up.
On my side, I like the words to adapt and flexibility. I think they are indeed the key words. Does it change really the activity on buy and build? I would say to a limited extent on our side. Companies that tend to have a greater cyclical component, we tend to be, first, we don't like to invest so much these days into these companies. We're not the only ones. So basically you see a market that's very dull, but that's true for platforms and build-ups. Reversely, there is a flight to quality for growing and very stable businesses. So there comes the question of prices, because there is an imbalance which pushes the prices upwards. Then where I see optimism is indeed we see more and more smaller companies that understand that they need to be integrated in a bigger group because they are more fragile. Speaking of digitalization, they cannot make the investments to face the challenges. So I think here we also get more calls return when we are proactively looking for them. So that's a good way to mitigate the competition on prices and a good way also to build great groups.
Excellent. So we have only a few minutes left. So is there any question from the audience for our guest? The questions. So it was
either we have been very boring or very clear.
Very clear. Very clear. No, I would take the opportunity to thank you very much, Stéphane, François, and Charles, for this discussion. Very insightful, I think, for everyone in the audience and for myself. So thanks very much for taking the time, and have a nice day at IPM.
Thank you.